Hey guys, welcome back to the channel. Today's video, we're going to be breaking down the 3 ETF portfolio to really simplify your investment strategy. I want to show you exactly what I'm going to be doing over the next 20 years so you can kind of break this down. Now, when it comes to investing, it can be very easy. It can be very simplified. When you start investing into ETFs like I do, it does make it easy. You're not worried about stocks. You're not worried about the news. You're not worried about what is going on in social media. You are just consistently making contributions into your account. And over an extended amount of time, it will grow. And this is really the proven track record. They say the proof is in the pudding. And looking at the portfolio, it is doing incredibly well. So let me hop over here and show you exactly what we're looking at. So here we are on M1 Finance. Now, if you are interested in investing, we have some links down below. You can definitely check them out and invest in the portfolio yourself. So as we can see right here, this specific portfolio, we're about 185K. So far in all, we are up about 86%. Now, over the 4 years, I bought in 2022 when the market was going down, but over the last 4 years, we're at 86%. And it's been kind of bouncing between 90 and let's say 80 just with the performance. And I want to show you again exactly what we're breaking down and what we're doing with the performance. So net gain is right around 40K. So again, we've made a lot of contributions in here. And you also notice that this is since the very beginning, almost going on 4 years, which I believe it was around September of 21 when we started this. So total gain right around 43. You can see $4,500 in dividends. So pretty good on the portfolio with the current value of 185. Seeing total gain is almost 44,000. So that is a big chunk of the portfolio that we have seen just in gains. Money weighted return, again, that 86%. But then we start looking at what we're investing in. And this is where it really does make a big difference. Now, when I originally started in this portfolio, when it started, we were only investing in the VOO. We were not investing in anything else. And you'll notice again, in those last 4 years right here, we are up 91.51%. This goes back to the old philosophy of Warren Buffett talking about everyone should own the VOO and everyone should really own it in a major way. It is something that if you just had invested into one single portfolio, that would be the one to have it if you had one ETF and just investing in there. I mean, in 4 years, we're up 91.51%, which is pretty impressive. Now, after about 2.5 years, we did add the QQQM. Now, this, of course, is the Invesco NASDAQ 100. So not only are we tracking the two indexes, one is the NASDAQ 100 with the QQQM, one is the S&P 500 with the VOO, which you can see right here in the QQQM, we are holding 50%. Now, this is the reason why really heavily invested in tech. When you start looking at a lot of those tech companies, they are included in the NASDAQ. Even some of the ones that I'm not picking up in the NASDAQ 100, like let's say an Amazon or a Meta, we are picking up in the VOO with the Vanguard S&P 500, maybe a little bit in a lower percentage, which we're going to do the comparison between the two in just a minute. But overall, looking at kind of the comparison to them. And then, of course, the big one is FBTC. So this one is Bitcoin. So we do have a considerable amount, roughly 20% of the portfolio, which is invested in Bitcoin. And it's only been a very short runway, as we can see right up there, 15.54%. And I also want to show you a portfolio optimization tool, which I think is kind of crazy. And you have to be really cautious about what tools you're using and kind of how you're using them. So let's hop over, guys, and look at the comparison of the portfolio. Now, if you have not used ETF.com with the comparison, this is incredible to see the side-by-side comparison that we do have here within the 3 ETFs. And again, we know that QQQ is 50%, the VOO is 30%, and then that IBIT is that additional 20%. So in the QQQ, we are holding 103 companies. In the VOO, it is up to 107. But then we get into performance, and this is where it gets very interesting because you can see the 3 definite lines right there and looking at the difference. So the QQQM is outperforming the VOO by about 7% right there. And then, of course, Bitcoin. Bitcoin is at 83%, which again is kind of crazy when you look at the last year and looking at the performance. And this is why I do like to have more of a well-rounded portfolio. Now, of course, this removed the SCHD. So I had the SCHD in here for probably about the last 10 years. Over the last 10 years, the return was roughly about 11%. So looking and really the comparison of something like the NASDAQ 100, S&P 500, And of course, Bitcoin, that I feel like is just kind of a speculation, kind of a one-off. They have outperformed the SCHD, even looking at the total returns over an extended amount of time, which is the reason why I want to invest a lot more heavily, again, into tech, into the NASDAQ, or excuse me, the S&P 500 to grow the portfolio. There is going to be a time and a place where I feel like the SCHD and dividend income would really come in to supplement Social Security, but I am years and years away from that at this point. And then I do have a lot of faith and a lot of trust into Bitcoin. Is it going to make you a millionaire? Probably eventually, just for the adoption and everything. I know a lot of people do altcoins. Don't want to play with that. I'm just going to stick with Bitcoin, very similar to what we see with gold. But you can see over the last year, guys, we are 26.5%, which again is kind of crazy over the last 12 months, 20% on the VOO. So again, QQQM definitely outperforming with that heavy tech sector focus. And then the 1 year in the IBIT is up 83% in 1 year, which again is pretty impressive to see how incredibly well Bitcoin is performing. Then of course the cost, incredibly cheap. When we start looking at ETFs, you know, the 0.15 of the QQQM, the VOO is the 0.03, and then of course the IBIT is only a 0.25, so very cheap. And I choose to buy it in an ETF because I can have it in my investment portfolio versus having a self-custody wallet, holding it on Coinbase, whatever it may be. It's super simplified to invest into Bitcoin if you're buying it in an ETF, if you're putting it in your portfolio. And then some of the overlap. Now, this is something that everyone focuses on, and I know there's going to be comments. Drop them down below, guys, when you subscribe to the channel about the overlap. Now, for me, again, thinking of a 20-plus year runway to retirement, by the time I'm at 65, 67 for retirement age, I want to make sure that we have a very strong runway built up of these, really focusing again on some of the tech stocks. And you notice there are some within the QQQM that do overlap the VOO. NVIDIA, for instance, there's a 17% really stake in there for NVIDIA. When you think of the company itself, guys, it is up, and I believe it was something incredible, like 12,000% in the last 5 or 10 years. It's pretty incredible how well it has performed. Microsoft, Apple in there. But then you'll notice kind of the shift, like Broadcom, we do have an overlap. Amazon, we have Meta's in there. But then we have some like Netflix, again, that are not held quite at the percentages that we're seeing in the VOO because it is built up of all of the sectors. But still, when you start thinking about the foundational ETF, that is going to be the VOO. When you start looking at the very heavy growth, that is going to be that NASDAQ 100. And then again, I want this IBIT to grow. I really do have a lot of faith in Bitcoin, and I feel like this is going to grow to an exponential rate. Now, when we start looking at a portfolio optimizer, this is something from Portfolio Labs. And again, you have to really take this with a grain of salt, guys, when you look at the optimization of the static portfolio. So I put in exactly what I had here, 50% in the Invesco, 30% in the Vanguard, and then we had 20% into Bitcoin. It goes through, it optimizes what exactly I should be investing at. And looking at the 1 year look back, which we could do a little bit further if we had a paid version, it goes to putting 50.11% into Bitcoin. So putting half of the entire portfolio into Bitcoin, the VOO at 36%, and then the QQQM at 13.51%. So again, running about a 50-50 portfolio in here, but I really do not and would not feel at ease investing 50% of my portfolio into Bitcoin itself. I feel like that might be really shooting for the moon. You know, if Bitcoin goes south, if we see some of the value come down, I would rather have a lot more invested into, you know, the major players, the big AI companies and the major stock companies and the physical companies that we actually have when it comes to the VOO and the QQQM. Again, instead of literally just going YOLO and betting everything on Bitcoin and putting 50% of this entire portfolio into there just to kind of see what happens. Now, overall, like I said, with the returns that we've seen over the last couple of years and really the portfolio performance, this is the interesting part, because when we start breaking this down in the last 6 months, we can see that the optimized portfolio is running about 12%. Year to date, it's about 17. And of course, the original portfolio was right here versus the benchmark at a 7.62. So we're even doing well above the benchmark that we have right there. Then you start seeing where it changes. So going back a year, the optimized portfolio, putting that 50% in Bitcoin would be running about a 70% return, we're at about a 45 in the original portfolio, which I hold right now in the last 12 months. And then, of course, looking at the benchmark is at 22%. And even looking at the 5-year, again, you can see where this differentiator factor really comes in. You're at 90% with the Bitcoin. And even going back 10 years, it does not change at all, because remember, the IBIT and a couple other ones from the portfolio are relatively new, meaning those ETFs that we have around Bitcoin. So 5 years is the max that we can actually go back on here, but we're at a 60% versus a 90%. And again, this could be something you could absolutely look at if you're much younger, if you're, don't really have as much invested, being in your 20s and 30s, maybe taking a little bit more risk, maybe a little bit more into cryptocurrency, maybe a little bit more in the tech would really make a big difference when it comes to that build out and when it comes to the portfolio in general. Sorry, guys. So that is going to do it for the breakdown today. Again, I just wanted to share it. After really 4 long years, I did cash out of the SCHD. Could it have been a mistake? Absolutely. Only time will tell where exactly that's at. But again, looking at the total returns, looking at really over the last 12 to 24 months, didn't like the rebalancing that did, or the recharacterization that they did of the portfolio and going into very heavy into healthcare. I feel like that's an industry. Yes, it's going to grow, but I feel like it's at the level that it needs to be? Probably not right now. So again, guys, let me know in the comments what you guys think about the portfolio. Definitely like and subscribe to the channel if you have not already. Have a lot more coming around the investing aspect. But again, let me know in the comments what you guys think. And as always, thank you guys for watching.